Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to a new episode of A Canadian Investing in the U.S. with Glenn Sutherland. This week, my guest is Trevor Thompson. Trevor, you want to give everybody an intro to yourself, and then we'll go from there.
I'm originally from Niagara Falls, Canada. Spent most of my life in the attractions and entertainment. So I started with Ripley's Believe It or Not there on Clifton Hill at age 13.
Oh yeah, I've been there.
Worked there all through high school. Then I did 18 years with Guinness World of Records, which included operating a company-owned one in the Empire State Building in New York, opening a franchise location in Los Angeles. I really wanted to move to the US, so I wanted to open a Guinness in Orlando, Florida. That deal fell through, but I ended up, strangely enough, opening a year-round haunted house, and then got hired in 2000 with a company called iFly Indoor Skydiving. So you have one there in Oakville, very near where you live.
Yep.
That's a franchise. I opened that one as well. And in 20 years, I opened 46 of 80 locations all over the world. And then at one point, we got bought out by a private equity company, which allowed me to start investing in syndications. And then I got started to be a little more active. COVID came along and changed the world for me like it did for many others. They let me go. And so I switched over to be an active real estate investor. So in the 5.5 years, I'm a passive investor on 20 syndications. 8 of those have gone full cycle. And then now I'm a general partner sponsor on 11. 8 of those in the last 1.5 years with massive capital. So
Wow.
It's been a wild ride.
Yeah, there is so much stuff we could possibly talk about here. But that's an interesting transition. But I think everybody, like even myself, when you hear about their previous life, around real estate, it's something completely different than a real. And in most cases, there's some people that are like real estate agents that convert to it. But
I'm quite different because I didn't do what most people do. Start with single family. I was terrified of toilets, tenants, and trash. Just didn't want to do it. Knew I should, but didn't want to do it. And then when I did get the payday from being bought out, I went, okay, I no longer have the no money excuse. I've got to learn this. And then all of a sudden I learned about syndication. And I'll be honest, I went, where have you been my whole life? This is exactly what I've been looking for. And I understood from my business experience the model, right? So experienced people buy a business, which is backed by an asset. They improve that asset and the business, and they sell it for a multiple. And I just went, where have you been? Like, this is exactly what I've been looking for. And, obviously I've been pretty active being on 31 deals in 5.5 years. So.
Yeah, no kidding. What, from your previous life of doing the businesses and stuff, what parts of that, do you think helped you in doing even passively investing or active? Maybe let's apply it to both, maybe 2 answers to doing it passively and actively.
Again, a lot of people don't really even think of this, and especially in multifamily, it's a very customer focused business. Okay, your tenants are your customers. Your investors are, in theory, your customers or your partners. And so there's a lot of relationship building, just like there was in this business, right? In theory, you paid me to enjoy yourself in the entertainment space. You paid me for an experience. And on this, you're giving me your money. You're hoping that I'll make a place better for people to live. I'll make them feel like we want them to be there. They're our residents, not our tenants, that kind of thing. And then the concept, we bought back several franchises during the period. And the concept of buying what we call the mom and pop small business operator and adding professional business practices. So, we would always come in, we would add more systems and processes. We would add some CapEx to fix the place up. We would improve the marketing. All of those things were translatable and surprisingly translatable. It was because that's all I did. We bought back about 4 franchises, and that was part of my role again with the company. I would go in there, help reorganize them, improve them. And ultimately, when we did have the capital event, we sold it for a multiple of our earnings. So there were many things that were similar. And then because I'm a customer service crazy man, that helped me with investor relations, meeting people, establishing relationships with people, making them feel comfortable. A lot of people don't think of that, but that's a huge part of what we do, especially on the capital raising side.
That's interesting. And yeah, like having all of this business experience will definitely help you. Where my mind's going is if you have all the business experience, why even switch to real estate? Why not buy more businesses or improve businesses if you have the business background? Because I'm just thinking for my own personal what's going on in my mind right now. I like to diversify. I do different markets, and I'm also like looking at buying some businesses and maybe some that complement like my own real estate right now because I already have the real estate portfolio, and to like maybe own a HVAC company or something that complements an electrical company or some of the trades or people that I hire all the time. Why not go down the path of owning the businesses than owning real estate?
So part of it was to try to be the disciplined and not take the shiny object.
Okay.
Part of it is when you look at real estate syndications, less than 3% are unsuccessful. When you look at new business startups, 60% are unsuccessful, and kind of a time energy factor. It takes a lot of time to run a business. I almost bought like it's called F45. It's a health franchise, and
I've seen that.
When I was opening I Fly in Queenstown, New Zealand, I went for 6 weeks, and I was just blown away at my fitness level improvement, and thought, okay, this will help me live longer, may earn me some money. I almost bought a franchise, and thank goodness I didn't, because I would have closed right as COVID hit. And we all know what happened to the fitness industry. It was tough, right? They couldn't operate. A lot of people
couldn't go in.
yeah, you couldn't go in. And in Texas, we opened up pretty quickly. But I have a friend who owns some of these franchises in other markets that were closed down for a lot longer, like Seattle. And, he even moved his outside to the parking lot, and they still shut them down, which is somewhat crazy. But so I'm kind of glad I didn't in retrospect, and I'm kind of sad because I put on 20 pounds and might have not done that. But I don't think that it's something that I won't do at some point. I just really wanted to focus, and real estate is just so powerful. The fact that you can use the leverage, you can get a lot of things, and especially on the active side, even though you're not cash rich, your net worth richer, grows a lot quicker. But I definitely think at some point I might be open to doing something.
Okay. And I'm just thinking, like, just based on what you just said, like if you're owning a business, you would typically do the process of improving the business and doing all that part in order to, improve the net operating income, same sort of thing, apply to a cap rate, improve the value. Same thing you're doing with doing a syndication. But is the perk that you can use property managers and asset managers?
Absolutely. Yeah.
Is there not like in the business
I'm part of a
bigger...
bigger...
Sorry, go ahead. Hello, everybody. Thanks for listening to the podcast. I just wanted to let you know that I've created a new coaching program. I believe the new coaching program has way more value than any of the programs that have even existed in the past. What we've done is pre-recorded all the lessons so that you can work through it at your own pace, which is pretty cool. And then we're going to meet up on a regular basis to answer the questions, do deal analysis, and actually spend our time together working on things instead of spending our time learning things. I think this will make a seamless transition to buying in the United States and will help you solve a lot of your problems. If this is of interest to you, go to glensutherland.com/coaching. I hope to help you guys invest in the United States, and I hope we provide as much value as possible. Back to the podcast.
Yeah, no, I'm part of a bigger group, right? So I've got kind of a team. I'm not, when I first started my first couple of deals, I'm still on a couple of deals very hands-on. But with our group, we have 200 million in assets, so it's a bigger company. We have a full-time asset manager, we have full-time finance guys, and I get to spend my time on what I'm really good at, which is investor relations, creating a community, doing all of those things.
Gotcha. if you're doing a business, is there not a similar service that could,
There,
that could be like a property manager, asset
definitely,
manager?
definitely could be, yes. And
Yeah.
again, even when I was thinking of doing the healthcare fitness business, I have a friend who actually has a degree in physical fitness. My idea was okay, I would own 70% of it, he would own 30% of it, and he would be the one that would, because again, those things are only as good as the trainers in the facility,
Oh,
the way
correct.
you
Yeah.
create a community within your group. And he actually worked with me for many years with iFly. So I knew he had the similar skills. So definitely it is applicable. Again, I'm just trying not to do the shiny object and stick with one thing and do it well.
No, that makes a lot of sense, right? That makes a lot of sense. And so I'm guessing that you don't own any businesses anymore besides like the real estate type of.
That's correct.
All right. So you mentioned like, you were from Niagara Falls. Um, where are you living now? I know it's in the US.
Yeah, I'm Austin, Texas.
Yeah.
So I moved to Orlando, Florida. The land of tourism kind of made sense.
Yeah.
So I moved to Florida in 1997. And then in 2006, our company moved from Orlando, iFly did, to Austin, Texas. So I moved to Austin, Texas, and I've been here ever since. I do kind of wish I kept my house in Canada, and because you guys have had some pretty impressive appreciation in the
Yeah.
last 10, 20 years. It's
Oh yeah.
insane.
Um, what was I going to ask? I just got listening too much. No, so I always hear about different millions of different ways of people. Well, that's being a bit of an exaggeration, but different ways that people actually go from living in Canada to living in the US. Was it like because at the time you were had the iFly thing, was it part of like a sponsorship from that with like an
Yeah, so
EB5 or
it
something?
was actually super challenging. The US is not as friendly as you would think it would be to get here. So
No.
originally I came on a free trade visa as providing a service, and I needed to maintain my Canadian residency and pay my Canadian taxes for about 3 years. And then I switched to what was called an H-1B visa, which was an employer sponsored.
Yeah.
But they basically just agreed to sponsor me. I still paid all the fees and did everything. They would just sign the paperwork. And then I went through that for a long time. And then I finally got it to green card status. And it's quite interesting that it's just makes no sense. Okay, so I came to the US. I started it with a business called iFly that in theory was losing money,
Yeah.
grew it to 1,000 worldwide team members, sold it for $280 million, and none of that counted towards my citizenship because it was done here.
When you say done here, done in Canada? Why wouldn't they count any of that? Like,
It's just the way it is. It's just the way it is that you couldn't count anything that you did here. It was bizarre.
wow. And so I always hear different ways of people have done it. So you were going from, was it EB, whatever visa it was anyway.
Yeah.
And then you went and you eventually got a green card. How long were you living in the US before you could apply for a green card? I've heard some people saying 3 years. I've heard people saying 5.
Yeah, so it took me about 6 or 7. Part of it was just because of where I was in the system. So the US has certain things that it favors. So for example, if I was a nurse and they needed a nurse, I could have gotten in less than 12 months. Or if I had some sort of thing they wanted.
Right.
They don't want somebody without a college degree who has nothing in theory, even though I did bring a lot of skill sets.
Yeah.
So I even had to, like, as part of my thing, I had to have people vouch for me. And I got what's called the equivalency of a BA in business administration with a minor in marketing. Like, it was quite bizarre. So many things. So, for example, Canada free healthcare, right? I had to have TB tests for my whole family. Because again, it's just the way the rules are. So I literally had to and none of that was covered on my healthcare because it wasn't necessary. So it was quite interesting. But I'm super glad I did it, but I still do maintain my Canadian passport and I plan to. Neither country makes you turn it in. So it just gives you those extra options when you need it.
Cool. And then I'll switch it back to the multifamily a little bit. My questions are kind of jumping all over the place,
Yeah.
just where my mind's going. But for investing, you said you went to Orlando first, and then you were moved over to Austin. Does that mean that your investments have kind of done the same thing?
No, so I didn't start anything till I was in Texas.
Okay.
Most of my investments are in Texas, but I do have some investment in um, Arizona, Denver, North Carolina, South Carolina, but everything else is in Texas. So the majority of them were in Texas. And I'm a little bit more than multifamily. So we have a land entitlement, we have a new build retail, I have a new build storage, and I have a medical center. So I'm a little bit diversified by market and asset class, because I think once you reach a certain level, you need to kind of, diversify in not only in geographic area, but also asset class. So I have mostly value add C class properties, but I do have a new build A class. I have a class that was new built, bought from a developer. And then, medical is a medical center, which has really gotten popular here in the States, where it's kind of like a, 3 or 4 doctors are located, and, it's gotten very popular.
Yeah, no, I've heard the same thing. If you're changing from like asset classes, for instance, I heard self-storage, some plazas, some multi-res. Do you need to change your team members, or are you able to still use the same team?
So those ones were all done passively. So I
Okay.
invested with people that were in that area already.
Okay.
So the medical one, he's actually an ex-surgeon, good friend of mine. His partner's a good friend of mine. This was like their 10th clinic. And it's just kind of a business model that, they've got a certain buy box, and when they
Gotcha.
find it, they raise some investor capital and, sort of duplicate. And then the storage one, this was their first new build, but they had done several buying existing, making them more valuable.
Yeah.
And this was their first new build.
Okay. Cool. And then so for yourself, when you're being the active partner on this, or the GP on this syndication, is that all multi-res, or what
No, so we have land entitlement or development. We have
development?
new build retail, and that's because we've partnered with somebody who's an expert in it. And then the rest is value add multifamily.
Gotcha. Gotcha. That makes a lot of sense.
Yeah. And the majority of it is value add multifamily.
Yeah.
But we're going to be growing a lot more into the retail. So neighborhood retail has just exploded in the US. The big malls are gone, but
Yeah.
the neighborhood retail with the things that you don't want to buy on Amazon, or you can't do, or the dentist's office, or the little restaurant, that's just exploded. I know it has in Canada as well, but it's just exploded as a very good asset class. And then on the investment side, a triple net lease, where most of the responsibilities and risks are put over to the tenant,
Yeah.
has a different return paradigm.
Okay. And then for the ones that you're actively working on, are you still open to all those same markets, or is it mostly Texas?
No, we're open to all of those markets.
Okay, so Sunbelt markets.
Yeah, and we were looking at Florida a lot. We're going to wait. Texas also has insurance craziness. We're waiting for Florida craziness to calm down a little bit. Just because it's volatile, and Florida appreciated in value a lot quicker than Texas. So Texas, you can still, I mean, we've got an offer on a property, and it's just insane. We're buying it for 80 something $1,000 a door. Just insane. Like,
Yeah.
Texas still has still a lot of meat left on the bone.
Yeah.
Because especially with how many people are coming here.
Oh, it makes a lot of sense. So what are you working on right now?
Yeah, so we're working on our biggest deal ever. It's under PSA. It's 400 units in Houston, Texas. So it's our first one. It's a $32.5 million asset. So that's our biggest one to date. Before that, it was 18 million. So it's a big step up, almost double.
Yeah.
And then we have 3 development properties. And then one odd thing we're working on. So even though office is dead, we need an office and our partner needs an office. And so we're looking at because right now you can buy office for like 50 cents on the dollar. We're trying to find the right size asset that we could put some higher end tenants on the first floor that need that retail kind of space to it. And then, a couple of other tenants, and then we can occupy a couple of floors. And, the goal is, let the investors make some money and let us live kind of rent free.
Yeah, that's cool. And then for buying any office space, do you expect any recovery in the office space?
So yes and no. So the big downtown offices, I don't know if they're going to recover. So we're looking more at suburbia, 2, 3, 4-story offices, not the really big ones. Right. And the ones, again, like, customer, the first floor being occupied, people that have customers versus clients, and then keeping the second and, and if we have the second and third floor, and somebody that wants a view gets the fourth floor, that's what we're looking for. More what I'm going to call, again, a neighborhood office versus a downtown metropolitan space. I think that space is going to struggle to recover.
That makes sense. Yeah, it's about finding the niches in these sort of.
And will it recover eventually? Absolutely, because the world will just realize that we just all can't keep working at home. We're not as productive. I see it just on people I work with. They're on calls when they should be at work. Oh
yeah. Oh, they're doing everything else. They're washing dishes, doing laundry. There's so much distractions at home that I think a lot of them, even some have
and
jobs.
I think it started out fear. I better stay busy or they'll get rid of me. To comfort, they can't really figure out what I'm doing. That's my theory.
Yeah. That's awesome. Thanks, Trevor. So if people want to get a hold of you, what's the best way to track?
So the best way is LinkedIn. So K Trevor Thompson. Just got to remember the K. Keith is my legal name. Only on my passports, not use it anywhere else. But that's the easiest place to be able to find me.
Okay. I'll make sure I add K Trevor Thompson on the show notes and stuff too, just so people may be able to find that. Well, anyway, Trevor, that was a lot of fun. Thanks for coming on the show. I really appreciate it.
I really enjoyed it. Thank you.
That was a nice video. Bye.